It all started in 1922. Congress passes Grain Futures Act signed by President Warren G. Harding. The act required Chicago Board of Trade members to report their aggregate trades to the newly formed Grain Futures Administration. In 1924, its first annual report was issued. A key feature of the report was to differentiate speculators from the trade. In 1925, Chicago grain traders formed the Board of Trade Clearing Corporation, now the Clearing Corporation, to provide trade anonymity in aggregating and reporting trades. Portion sizes were only informally controlled. Monthly reporting continued under the Commodity Exchange Authority created by the Commodities Exchange Act of 1936. This act empowered the CEA to establish a speculative position size limits as well as prosecute market manipulators and banned option trading on commodities, a restriction that was not lifted until 1982. In 1942, the Commodity Future Statistics Report was published separately from the USDA Annual Report. The new publication included monthly trader statistics. CEA published the first monthly COT report on July 13, 1962. This listed large trader positions for 13 agricultural commodity markets as of June 30th. In 1974, Congress created the Commodity Futures Trading Commission, CFTC, to succeed the CEA. Several conditions were made to the COT report, including adding data on the numbers of traders in each category, a new crop, old crop breakout, concentration ratios that show the percentage of open interest held by the 4 and 8 largest traders. COT report release interval has been incrementally shortened beginning in 1990 with mid-month and month-end reports to every 2 weeks beginning in 1992 and to the current weekly schedule in 2000. You can now collect the data at the CFTC's website at 3:30 p.m. Eastern Time each Friday. Let's continue with COT report history. During the 1970s, the large non-commercial category was most likely dominated by large individuals. In 1982, the CFTC stopped requiring large traders to report their own positions. However, the report was reintroduced in December of the same year upon request as paid subscription. In 1983, the COT reports began listing the trade as commercials instead of the previous heading of hedgers. In 1995, the CFTC added 2 new COT reports that combined the options open interest with the underlying futures positions, known as Options and Futures Combined Data or with Futures Only Breakdown. In 2006, the CFTC pointed to the revised heading in justifying the dumping of swap funds into the commercial category. In 2007, the Commission introduced a new supplemental report that was a subset of the data contained in the Options and Futures Combined Report. The COT report increases transparency from the legacy reports by separating dealers into 4 categories of traders. All of the COT reports provide a breakdown of each Tuesday's open interest for markets in which 20 or more traders hold positions equal to or above the reporting levels established by the CFTC. The reports are published in futures-only formats as well as futures and options combined formats.